Hi, hello my dear CFNL students. In the previous video, we have completed charge under IGST. In this video, we are going to proceed with charge under IGST. So welcome to the rocket revision series. So please look into page number 35. So you can see the first area, that is meaning of India, is there. So we'll just skip it and look into section 7 and section 8 of IGST Act. So here we are going to learn about the IGST Act sections. Section 7 of IGST Act deals with the meaning of interstate supply. What is the meaning of interstate supply? If the location of supplier and place of supply is in the same state or same union territory, then it is intra. Whereas if it is two different states or two different union territories, a state and a union territory, then it is interstate supply, that is given in 7 subsection 1 and 7 subsection 3 of the IGST Act. Then 7 subsection 2 and 7 subsection 4 of the IGST Act deals with import of goods and import of services which are deemed as interstate supply. Import of goods till the time it is cleared for home consumption, so it will be treated as import of goods only, and that will be interstate supply. And thereafter, after clearing it for home consumption, then the person will be making sale to any other person. Thereafter, it will change as either intra or inter. For example, I am in Tamil Nadu. I imported the goods. So till the time I clear the goods or some other person clear the goods from the customs, it is treated as import. So therefore it is interstate, IGST. Whereas once the person has cleared, for example, I have cleared or I have transferred the document of title to some other person, and that some other person has cleared, and thereafter when he is further making sale, so then we need to check whether it is intra or inter depending upon. So supply involves movement of goods or supply does not involve movement of goods, etc. That is, we need to invoke the place of supply provisions. But when it is import of goods and import of services, we don't have to invoke the place of supply provisions. Then next, what is the meaning of import of goods? Bringing goods from outside India to India is known as import of goods. What is the meaning of import of services? 3 conditions should be satisfied. Where the supplier should be located outside India, where the recipient should be in India, and what should be the place of supply in India. If these 3 conditions are satisfied, then it will be import of services. Again, I am repeating: supplier outside India, recipient in India, and place of supply in India. Then, as per 7 subsection 5, there are some transactions which are regarded as deemed interstate supplies. What is that? If the location of supplier is in India and the place of supply is outside India, then it will be deemed interstate. Consequently, export of goods and export of services will be deemed interstate. How come, sir? In case of export of services, total 5 conditions should be satisfied. Supplier should be in India, recipient should be outside India, and place of supply should be outside India. As supplier is in India and place of supply outside India, so export of services will qualify for deemed interstate. Even export of goods also will be deemed interstate, because export of goods means taking goods from India to outside India. So where is the supplier located? In India. And place of supply in case of export of goods is location outside India. So because of that reason, what is the conclusion we can draw? That consequently export of goods and export of services deemed interstate. Then 7.5b says supply to special economic zone or special economic zone is making the sale. So both will be deemed interstate. So but whenever the goods are sold by SEZ, goods or services which is sold by SEZ or to SEZ, remember both will be coming under deemed interstate. But supply to SEZ will become 0 rated, but supply by SEZ is not 0 rated. Then 7.5c, supply is taking place in India and where it is in the taxable territory. Here taxable territory means India, and it is not elsewhere specified, so that will be covered under 7.5c. The first situation where 7.5c is applicable is with respect to supply beyond 12 nautical miles and up to 200 nautical miles. The meaning of India is up to 200 nautical miles from the baseline. So supply within territorial waters, we have section 9 which talks about whether it is intra or inter. We need to see depending upon the nearest coastal state. But beyond territorial waters and up to 200 nautical miles, if the supply takes place, then it will be coming under deemed interstate supply under 7.5c. Supply beyond territorial waters and up to 200 nautical miles from the baseline, because the meaning of India is up to 200 nautical miles from the baseline. What if the supply takes place beyond 200 nautical miles? Means the supply is outside India, then automatically supplier in India, place of supply outside India, that will become deemed interstate supply. Then second situation is if the place of supply is determined under section 13 of IGST Act and that place of supply is in India. So when the place of supply is determined under section 13, in case of services, if one of the person, that is either supplier or recipient in India and the other person outside India, then the place of supply is determined under section 13. Either supplier or recipient in India and the other person outside India, then the place of supply is determined under section 13. And if that is in India, don't check whether it is intra or inter, always it will be deemed inter. This is a very, very important point. Usually we miss in the exam. So because of the pressure or stress, whatever, So when you are writing it, you miss this point. So please remember this. For example, there is an architect who is located in Tamil Nadu who is providing construction services to Mr. Elon Musk in relation to the property. That property is also located in Tamil Nadu. Now, section 12 or section 13, if both supplier of service and recipient of service is located in India, then it will be section 12. But if one in India, other outside India, then it will be section 13. So in this case, section 13, place of supply will be determined under section 13. And what is that place of supply? Place of supply will be Tamil Nadu, that is location of property. So service in relation to immobile property, location of property will be taken as a place of supply. If you observe here, supplier is also Tamil Nadu, place of supply also Tamil Nadu, but it will not become intrastate supply. It will become deemed interstate supply because the place of supply is determined under section 13 and that is in India. So it will be deemed interstate supply. So these are the transactions which are treated as deemed interstate as per 7. Then section 8 talks about intrastate supply. If location of supplier and place of supply is in the same state or same union territory, then it will be intrastate. However, even if the supplier and place of supply is in the same state, but some cases it will not be intrastate. That is, if it is deemed interstate, we don't have to check that. Already I told you. So if it is deemed interstate, that is supplied to SEZ and by SEZ. If the supplier is also in Tamil Nadu and SEZ is also in Tamil Nadu, that is place of supply is also Tamil Nadu, but the supply is made to an SEZ, so it will be deemed interstate. Same is the case supply by SEZ. Then import of goods and even supply of goods to a tourist. This is an extra point. So there is a tourist who is coming from outside India to India and his stay in India is not more than 6 months. His stay in India is not more than 6 months. So whenever you are making sale to that particular tourist, so you have to treat it as deemed interstate. How do you know whether you are making supply to a tourist? So based on the strength of the passport, we will be making supply to him. So that should be treated as deemed interstate supply. That is as per section 15. This is for the purpose of tourist refund scheme. They have brought this, but the tourist refund scheme is not effective at present. But just remember, supply of goods to tourists is also deemed interstate. Then next, export of goods and export of services. Already we have discussed that export of goods means taking goods from India to a place outside India. Whether the consideration should be in convertible foreign exchange. They have not given anything related to consideration in the definition of export of goods. However, it is a well stated point that whenever we are making export of goods, if the consideration is not realized, even then we can still claim the refund. Usually in case of export of goods, we can claim refund under zero rated supplies. Either export upon payment of IGST and get refund of that IGST, or export without payment of IGST and get refund of ITC. Two options are there. The moment when the goods are taken from India to outside India, it is export of goods and we can claim the refund. However, keep this in mind that if consideration is not realized in convertible foreign exchange within the time limit prescribed under FEMA, so then in that case, the refund whatever is already claimed will be recovered. What is the time limit within which the proceeds should be realized as per FEMA? The time limit is 9 months from the date of export. Whereas if the goods are exported to a warehouse located outside India, that is export warehousing, so then in that case it will be 15 months. But for September exams, for May exam, this is the point. But for September exams, those students who are writing for September 2026, keep that in mind that whenever the proceeds are to be realized as per time limit under FEMA, now the FEMA time limit is 15 months always. So that 9 months time limit has been taken to 15 months. So due to that reason, the 15 months time limit is only what you need to remember if you are for September exam. But for May 26 exam, that 9 months time limit is only applicable. So that is with respect to this. But anyhow, that is not a provision related to indirect tax. It's a provision related to, like FEMA, like your SPOMA. So that is with respect to this. Second, export of services. Export of services, total 5 conditions. Supplier in India, recipient outside India, place of supply outside India. Consideration should be in convertible foreign exchange. It can be in Indian rupees if permitted by RBI. And supplier and recipient are not merely establishments of the same person. Not two establishments of the same person. Then it will be coming under export of services. Which means that if the supplier, like for example, I have an establishment in India. X Limited is having an establishment in India and I have a branch outside India. So now, even though these two are two separate persons, distinct persons, but they will not be treated as export of services, because if there are two establishments of the same person, it will not qualify for export of services. What if that branch we have incorporated separately in the law of that particular country? Then definitely it will become a different person and it will qualify for export of service. For example, you have a branch in UAE and as per the law of UAE, you have incorporated that particular company or that particular branch there. then it will be a different person. When you render service from here, it will automatically come under export of services. And then consideration in convertible foreign exchange, where is it permitted by RBI? In two cases it is permitted by RBI. Number one, whenever we are providing services to Nepal and Bhutan, the consideration can be in Indian rupees. Even when it is in Indian rupees, it is equated that no, it will be into convertible foreign exchange. Second, the payment will be created in special rupee escrow account maintained by a bank outside India. So therefore, there will be a bank which is outside India. In that particular bank, Indian government has made a kind of MOU or something signed, wherein that particular bank, the payment will be created in foreign exchange. For example, you are exporting services to Australia. Now in that case, the payment will be credited in Australian dollars in the bank which is in Australia, and they will remit it to India in Indian rupees. Still, it is considered as consideration received in convertible foreign exchange. That is the meaning of that payment created in special rupee escrow account maintained by a bank outside India. So these are the 10 transactions which are treated as deemed interstate supply. So supply to SEZ by SEZ, then import of goods or import of services, then export of goods or export of services, then supplier in India and place of supply outside India, supply of goods to a tourist, supply of goods or service beyond territorial waters and up to exclusive economic zone, that is 200 nautical miles, and location of supplier in India and place of supply is also in India, but place of supply is determined under section 13. Then we have discussed security lending under SEBI, that is in case of list of services which are covered under RCM. So security lending under SEBI, where the lender of the securities will be giving securities to the borrower of the securities, and the lender don't know so as to where the borrower is located, because this will happen through the stock exchange. That's the reason why this will always be deemed as interstate supplies. Then trading in priority sector lending certificate, because it is also the same way this will happen through e-Kuber portal of RBI, and the bank which is selling don't know the buying bank, so due to that reason, so it will be covered under deemed interstate supply. Apart from these 9 transactions, any advance that is received and which cannot be categorized into intrastate or interstate is deemed to be interstate. So we have collected some advance, but we don't know as to what is it for. For example, I am taking classes and I have got some fees, but I don't know whether the student is going to attend face-to-face or online live, etc. and all. Then in that case, for this advance, I have to treat as deemed interstate supply and chargeable to IGST. That is this. Then supply in territorial waters, that is up to 12 nautical miles from the baseline. If the supplier or the place of supply is within 12 nautical miles from the baseline, then the place where is the nearest coastal state we need to check, that will be taken. If location of supplier or place of supply is in territorial waters, then the nearest coastal state or union territory shall be taken as the location of supplier or place of supply. For example, if there is a marine engineer, so who is in Tamil Nadu and who is going to the Bay of Bengal for providing marine services, repair services to a ship, and in that case the place of supply will be taken as the location where services are actually performed. So because in case of place of supply, so section 13 will be applicable. Say the marine engineer is in Chennai, Tamil Nadu, and the ship belongs to one foreign company that is in Bay of Bengal. Section 13, performance based service in relation to goods, wherein we have one point, that is in case of ship, etc. and all related to business purpose, we need to see location of recipient. But if it is not for business purpose, then location where service is actually performed. So the service actually performed in Bay of Bengal, so we need to see the nearest coastal state to that ship. If the nearest coastal state to the ship is Tamil Nadu, then it will become intrastate supply to the marine engineer. If the nearest coastal state to that ship is somewhere in Andhra Pradesh, then in that case for the marine engineer in Tamil Nadu, it will become interstate supply. Now, if we determine the place of supply under section 13, and if it is in India, then it should be deemed interstate now, but we have section 9 as the overriding provision. So which means that even if section 13 place of supply is determined, we have to check whether it is intra or inter if the supply takes place in territorial waters. Even if POS is determined under section 13, supply in territorial waters may be intra or inter, as section 9 overrides any other provisions of the IGST Act. Then next we have section 16, that is zero rated supplies. There are 2 transactions which are regarded as zero rated supplies. Supply of goods or services to SEZ in relation to their authorized operations, and export of goods or services. So these 2 are treated as zero rated supplies. And what is the consequence in case of zero rated supplies? We have 2 options. Option 1, pay IGST on that outward supply, and using input tax credit we can definitely pay. And remember one point, generally if a product is exempted, you cannot take ITC. For example, say this pen is exempted. When this pen is exempted, you cannot take ITC on the material used for purchase of this pen. But when this pen is exported, it will become zero rated. So when this pen is supplied to SEZ, it will become zero rated. Now we can take ITC on the raw material purchase for making this pen. Okay. So whenever our outward supply is zero rated, don't check the nature, whether it is taxable or exempted. Always it is deemed as taxable. So for the purpose of ITC, so we can take the ITC on inward supplies. So option 1, pay IGST. While paying IGST, we can use the ITC for payment of IGST, and whatever is the gross IGST, not after reducing ITC. For example, my gross liability is 10 lakhs and ITC is 8 lakhs. What is that I am going to pay? Net is 2 lakhs. But how much refund I will get? 10 lakhs I will get as refund, not 2 lakhs. The entire gross I will get as refund. Option 2, don't pay any IGST on outward supply, and it will be under either bond or LUT. So depends upon the situation. So bond or letter of undertaking, so no need to pay. But already on the inward supplies which is used for this outward supply, we have paid the GST that we would have taken as ITC. That ITC will get as refund. But remember, ITC with respect to only inputs and input services, not capital goods. And we can choose between option 1 and option 2 with respect to each consignment in the same month. For example, in the same month, we are making 5 consignments. For 3 consignments, we can go for option 1, and for 2 consignments, we can go for option 2. We can decide between option 1 and option 2 with respect to each consignment. So in that month itself, not that it is option 1 selected during the financial year will remain throughout the year, not like that. And what about the blocked credits? When my outward supply is zero rated, can I take ITC with respect to inward supplies which are blocked ITC? No, blocked ITC we cannot take. Even inward supplies for non-business purpose also we should not take, and only matched ITC should be taken. Unmatched ITC should not be taken. Matched ITC means that is reflected in GSTR 2B. Yes, and ITC can be availed, but blocked ITC cannot be availed. Then government on recommendations can notify class of persons or goods which are allowed to make zero rated supplies upon payment of IGST. Accordingly, they are telling that all the persons other than these notified goods, they can make either under option 1 or option 2. So there are notified goods where the refund is not at all allowed. So what is that notified goods? You don't have to remember that notified goods for exam purpose, but these notified goods are pan masala, tobacco and tobacco products, essential oils other than those of citrus fruit. These are some notified goods. Neither option 1 or option 2, which means that are we required to pay IGST on export of these goods? Definitely yes. We have to pay IGST on export of these goods, and does not mean that we will claim the refund. See, refund not available does not mean we don't have to pay IGST. We have to pay IGST, but thereafter refund is available or not is what we need to check. So because export is deemed interstate supply, and IGST definitely will be applicable. But if it is refund eligible, whatever IGST you paid, you will get it as a refund, or you can go for export without payment of IGST option, provided the refund is eligible. Otherwise, normally it is a deemed interstate supply and we need to pay IGST. Keep that in mind. Then export of goods upon payment of customs duty, neither option 1 nor option 2. We will not get refund under both the options. That is, there are some goods which are covered under customs, second schedule of Customs Tariff Act 1975, and if you are exporting those goods, you are required to pay customs duty. Like for example, rice, coffee, tea, etc. When you are exporting, you have to pay customs duty. As you are paying customs duty, you will not get the refund under both the options. Should we pay IGST? Definitely yes, we need to pay IGST. Then export of exempted goods or services. So whenever you are exporting exempted goods or services, you will get option 2 only. You will not get option 1. Okay. So export of exempted goods or services. So because basically when a product is exempted, so when you are exporting, you cannot go for with payment of IGST because there is no rate for it. So how can we pay IGST? So that's why it is always without payment of IGST. Apart from this, all other cases, you can decide between either option 1 or option 2 with respect to each consignment. Also, whenever we are claiming refund of ITC, remember that refund of ITC is only with respect to inputs and input services procured during the month, not on the opening balance. And this refund is subject to the balance in ITC. If the balance in ITC is fully exhausted, then we will not be able to get the refund. So refund is subject to balance in ITC. Then suppose if proportionately partly exported and partly domestic, then proportionately we will get the refund. That is net ITC into export turnover divided by total turnover. So or zero rated turnover divided by total turnover. So in that way we will get the refund. So look into this. This is a comprehensive chart which will connect what is zero rated supply, what is deemed interstate supply, how we need to interpret, etc. and all. So first you need to see the transaction. When you see the transaction, see the location of the supplier and the place of supply. If the location of supplier is in India and the place of supply is outside India, then move on to the next. Whether all other three conditions are satisfied. What are the other three conditions? Recipient is outside India, consideration is in convertible foreign exchange or wherever permitted by RBI, it can be in Indian rupees, then supplier and recipient are not two establishments of the same person. If these three additional conditions are also satisfied, then what will happen? So first it will be a deemed interstate 75A, because supplier in India, place of supply outside India, and as the conditions are satisfied, it will become export of services, second. And number 3, as export of service will become zero rated, so therefore it will become zero rated. Now you have two options. What are the two options? Either you go for with payment of IGST or without payment of IGST. With payment of IGST, pay and get the refund. Without payment of IGST under bond or LUT and get the refund of ITC. Got it? ITC with respect to inputs and input services. Suppose if these three conditions are not satisfied, then what we need to do? We need to see that any of these three conditions are not satisfied, then it will become first deemed interstate supply. Why it is deemed interstate? Because supplier in India, place of supply outside India, so it will be deemed interstate, and we need to pay IGST unless it is exempted. If it is covered anywhere under the exempted transactions, it's okay, but otherwise it will be chargeable to IGST. For example, we have one point. So services provided, organizing business exhibition outside India. So when the services is provided by an organizer of business exhibition, where the exhibition is held outside India, the supplier is in one state, the recipient is in another state, but the exhibition is held outside India, so it may become interstate, but as it is exempted, we don't have to pay IGST. Otherwise, we have to pay IGST like that. So IGST payable unless it will be exempted. Then this is in case of, whenever you are having these two conditions satisfied, you need to proceed it accordingly. Suppose if it is SEZ, then check whether the transaction has supplied to SEZ or supplied by SEZ. Suppose if it is supplied to SEZ, super. The next thing what you need to check is that, is it for the authorized operations of SEZ? Either it can be SEZ unit or SEZ developer. SEZ unit means the one who is doing business inside the SEZ. SEZ developer means the infrastructure provider of that SEZ will be SEZ developer. Now we need to check, is it for the authorized operations of SEZ? Yes, which means that the officer will certify that it is used for the authorized operations of SEZ. If yes, then in that case, first it will become interstate, deemed interstate 75B, supplied to SEZ, okay, deemed interstate. Second, as it is supplied to SEZ, it will become zero rated. Now you have two options. What is that? Either pay IGST, get refund of the IGST, or you don't have to pay IGST and supply it under bond or LUT and get refund of ITC. Suppose if it is for others, then which means not for the authorized operations. So how you will know? Which means that clearly it will be specified in the question that it is not for the authorized operations. Then it will be still deemed interstate, but no refund and all. You have to pay IGST unless it is exempted. Unless it is exempted, you have to pay IGST. IGST payable unless it is exempted. What if it is supplied by SEZ? When it is supplied by SEZ, that is either SEZ unit or SEZ developer, then in that case it will be deemed interstate. So 75A. When it is deemed interstate, so definitely we need to pay IGST unless it is exempted. We don't have any refund with respect to this. What if the supply is made by one SEZ to another SEZ? Then will it be treated as supply by SEZ or supplied to SEZ? When the supply is made by one SEZ to another SEZ, it will be treated as supplied to SEZ only. So because of that, SEZ Act 2005 contains the provisions. So we need to treat it like supplied to SEZ. So again, the same two options, whatever is there, that will be applicable. But remember, don't treat as supply by SEZ, supplied to SEZ only we need to treat. So then supplier will automatically become like a normal supplier, and the SEZ will be like supplied to SEZ. The two options, etc. and all will be applicable. So this is with respect to charge under IGST. This is not given as a like along with the regular topic. So we have import and export under GST, like that one chapter given in ICS study material. There we have the information related to this. It's a small topic, but definitely it will have the connecting provisions in many other questions while solving the practical questions.